Arrived is a fractional real estate investing platform that fundamentally changes how the average person can build a property portfolio. Historically, getting into the rental market required a massive amount of capital, often a 20% down payment, which could easily exceed $50,000. This platform, which is notably backed by high-profile investors like Jeff Bezos, removes that barrier by securitizing individual single-family residential homes, vacation rentals, and private credit. Essentially, each property is turned into a mini corporation, allowing anyone to buy shares for as little as $100. This makes real estate accessible to almost every U.S. investor, regardless of whether they meet the high net worth requirements usually needed for private deals. The platform is designed to offer a fully passive income stream. Arrived handles the heavy lifting that typically makes being a landlord a secondary job, including finding the property, managing renovations, screening tenants, handling repairs, and managing the accounting. For the investor, the process is streamlined into 4 simple steps: browsing the listed properties, investing as little as $100, collecting monthly dividends from net rental income, and eventually receiving a share of the final sale price after a hold period of 5 to 7 years. This model allows for direct ownership of specific assets, meaning you can pick the exact house in the exact neighborhood you want, which offers more transparency than a traditional real estate investment trust where properties are pooled together. From an educational standpoint, this tool solves the pain point of high entry costs and the time commitment of property management. It provides tax advantages through pass-through depreciation, which can help shield some rental income from taxes. However, it is vital to understand the risks involved, particularly regarding liquidity. When money is invested here, it is typically locked up for 5 to 7 years. While there is a secondary market pilot, there is absolutely no guarantee that shares can be sold if cash is needed for an emergency. This makes it a tool for long-term, patient capital rather than money that might be needed in the next 24 months. Investors should also be aware of the fee structure, which can impact total returns. There is a one-time property sourcing fee that is often around 5% when a house is purchased, along with an annual asset management fee of approximately 0.15% of the property value, in addition to standard property management fees. Furthermore, investing in a single home carries concentration risk. If a specific property sits vacant or requires a major repair like a new roof, the dividends for that specific investment could drop to zero. To mitigate this, manual diversification across many different homes is necessary. Because popular houses often sell out within hours of being listed, investors need to be proactive and responsive to inventory drops. Ultimately, this tool is best suited for those who want the benefits of being a landlord, such as rent and appreciation, without the headache of managing a physical building. It serves as a way to diversify away from the stock market into an asset class that does not always move in lockstep with the S&P 500. While active landlords who manage their own properties might see higher returns by avoiding platform fees, Arrive provides a middle ground for those seeking ease and accessibility. It is a legitimate and well-designed platform for democratizing real estate, but it should be viewed as a long-term commitment rather than a flexible savings account. In summary, Arrived is an innovative platform that allows for low-cost entry into real estate with professional management and the potential for monthly dividends and long-term appreciation. However, the risks are significant and centered on severe illiquidity and the potential for loss of principal if the housing market declines. The fee layering and the fact that performance is not guaranteed mean that while it is an excellent tool for diversification, it requires a 5 to 7 year horizon. It is not suitable for those who need immediate access to their cash or those who want to avoid the risks associated with individual property performance and platform management fees.